Paul Tudor Jones II is one of the most successful hedge fund managers in the world, known for his macro trades, particularly his bets on interest rates and currencies. His success has made him a multi-billionaire, and if you want to get to know one of the world's richest people a little better, then stay tuned as we disclose the untold story of Paul Tudor Jones. As of 2021, Forbes estimates that Jones is worth a whopping $5.8 billion, and in 2020, he was the 320th richest man in the world, and number 108 on the Forbes 400. In addition to that, Jones' legacy was cemented in 2008 when he was inducted into the Investors Alpha's Hedge Fund Manager Hall of Fame. But despite being a busy man, the 66-year-old still has time for family. He's been married to Australian-born Sonia Klein since 1988, and the couple currently live in Palm Beach with their 4 children: Caroline, Dorothy, Dottie, Chrissy, and Jack. While Klein doesn't have much to do with investing, she is an entrepreneur herself, a yoga entrepreneur to be exact, who currently owns a series of yoga studios and boutiques. In 1976, Jones graduated from the University of Virginia with a degree in economics, and then spent a couple of years working on the trading floors as a clerk, later taking on an appointment as a broker for E.F. Hutton & Company, before deciding to apply to Harvard Business School. But just as he was about to go off to university, he realized there was no reason for him to go to business school, as he was already in the best place possible to acquire the skill set he needed. So Jones decided to stay where he was, convinced that business school wouldn't help him get ahead in his chosen career. After graduating from the University of Virginia, Jones went to New York, and it was there that he discovered his passion for trading. He told Turtle Trader that it was during his very first visit to the commodities exchange that he knew that this would be his future. Jones said, "I went to New York and saw the floor of the commodities exchange, and there was such an energy level there, and so much excitement that I knew that was the place for me. I've always liked the action, and the exchange seemed like a perfect home for me." So despite initially applying to Harvard, Jones eventually decided to ditch business school and stay in New York to do it on his own. However, he soon realized that working without the backup of a team is pretty difficult and quite boring, especially if you're used to being part of a group. He told Turtle Trader, "All through growing up, I've been involved in team sports and fraternities, and in school I was involved in a whole variety of activities, all of which were team-oriented. And when I was on my own, I was printing money every month, but I wasn't getting the psychic satisfaction from it." Luckily, Jones's cousin is none other than William Donovan Jr., former CEO of Donovan Enterprises and one of the world's biggest cotton merchants, who introduced Jones to commodity broker Eli Toulis. Toulis quickly became a mentor for Jones, and while the multi-billionaire learned a lot from him, he has also stated that it was definitely one of the steepest learning curves he ever had. Jones said about Toulis, "He was the toughest son of a bitch I ever knew. He taught me that trading is very competitive, and you have to be able to handle getting your butt kicked. No matter how you cut it, there are enormous emotional ups and downs involved." Once he had amassed enough knowledge in trading cotton futures at the New York Exchange, Jones decided that he could start his own business. So in 1980, he founded Tudor Investment Corporation, an asset management firm based in Greenwich, Connecticut, that focuses on assets in fixed income, currencies, equities, and commodities asset classes. In the 4 decades since, the company has grown into a multi-billion-dollar company, managing more than $17 billion in assets. In addition to applying his knowledge, Jones has also decided to pass some of it on to others, hoping to educate other Americans about which companies are considered just. Paul Tudor Jones and a number of other notable names from the world of business and finance, including Deepak Chopra, Ronaldo Brudico, Arianna Huffington, and Paul Ciala co-founded the independent research nonprofit Just Capital. This organization ranks companies on various issues, providing information on the business behaviors of various companies to the US public in an effort to build a better and fairer marketplace. Although he was still fairly new in the game at the time, Jones already knew enough to predict the 1987 market crash, which became known as Black Monday. The crash, which began in Hong Kong before spreading throughout Europe and the US, resulted in the Dow Jones Industrial Average falling by 508 points, down to 1,738. And thanks to a successful prediction of the crash, Jones avoided becoming one of its victims and instead managed to triple his investments. This early success in his career was obviously of interest to the media as well, but Jones has spent more than 3 decades trying to repress a PBS documentary from 1987 that concentrates on his trading activities. The film pays special attention to Jones's prediction of Black Monday and the methods he used in both anticipating and profiting from the subsequent crash. However, despite being painted in a positive light in the documentary, Jones reportedly tries to buy videos of it up immediately whenever they pop up, while online uploads are usually taken down quickly as well. The reason behind his ongoing fight against the release of the documentary is believed to be his reluctance to reveal his trading secrets. According to Paul Tudor Jones himself, he is one of the most conservative investors in the world for one simple reason: he hates losing money. So when investing, Jones tries to avoid taking any risks, and he says he doesn't like the idea of having much of his money tied up in stocks. When speaking with Turtle Trader, he said, "My grandfather told me at a very early age that you are only worth what you can write a check for tomorrow." So the concept of having my net worth tied up in a stock a la Bill Gates, though God almighty it would be a great problem to have, it would be something that's just anathema to me, and that's one reason that I've always liked the futures market so much, because you can generally get liquid and be in cash in literally the space of a few minutes. So that always appealed to me, because I would always be liquid very quickly if I wanted to. I'd say that my investment philosophy is that I don't take a lot of risks. I look for opportunities with tremendously skewed reward-risk opportunities. If you are a multi-billionaire, you probably have more money than you know what to do with, which is why there are several billionaires including Bill Gates, Elon Musk, Warren Buffett, Mark Zuckerberg, Richard Branson, for example, that have joined the Giving Pledge, which is a campaign that encourages the world's wealthiest to commit to giving a major part of their fortunes to charitable causes during their lifetime. As of 2021, there are 217 pledgers from 24 countries, with over $500 billion donated to philanthropic endeavors so far. In their pledge, Sonia and Paul Tudor Jones say, among other things, "We are joining the Giving Pledge because it deepens the joy of giving. We have been giving all our lives, so taking the pledge will change nothing in the logistics or amount of our charity. But joining this larger community of generous and kind-hearted folks is appealing to us. When two join together, their strength isn't merely doubled, it's increased manifold. This community, like any community, is much greater than its number of individuals. We have found that all giving is joyous. True happiness, in fact, is impossible without generosity of money, time, and/or talents. We emphasize time and talent because intellectual capital trumps financial capital every time, but it's the spirit of generosity underlying all giving that can have the greatest impact." In addition to joining the Giving Pledge, Jones has also supported other nonprofit organizations, such as the Zimbabwe-owned Malelangwe Trust. The trust focuses on harmonizing conservation activities, community development programs, and ecotourism, according to their website. And aside from supporting this organization, Jones has also co-founded an organization called the Robin Hood Foundation, which aims to alleviate problems caused by poverty in New York City, and which is backed mainly by hedge fund operators. Other founding members are Peter Borish, Glenn Dubin, and David Saltzman. In 2002, the Tanzanian government leased Jones the Grumeti Reserve in Tanzania's western Serengeti, a 340,000-acre reserve where 5 lodges have since been established: an eco-reserve, a private-use retreat, 2 tented camps, and the resort's flagship Sasakwa Lodge. This lodge is built in the style of a stately Edwardian manor house with 9 private cottages and a villa, and offers guests a luxury vacation, during which they can enjoy a world-class experience with wood-paneled libraries, labyrinthine corridors, tennis courts, a spa, yoga center, infinity pools, and European cuisine, as well as game drives and guided safari walks. The luxurious lodge has been among the world's best hotels in Travel and Leisure magazine, ranking several times, and has recently been voted the #1 in African resorts by more than 715,000 Condé Nast Traveler readers. While Paul Tudor Jones is known as a philanthropist today, his attempts at doing well have not always ended in success. In 1986, for instance, after watching an episode of CBS News 60 Minutes about Eugene Lang, Jones decided to adopt a 6th grade class in Bedford-Stuyvesant, Brooklyn, at an underperforming public school. The class was promised college scholarships if they graduated high school, and Jones believed the financial motivation would prompt this academically struggling class to excel. Unfortunately, only 33% of the students eventually graduated, and Jones has since admitted that he had failed to realize the full scope of the problem. In a 2009 speech, Jones said that he vastly underestimated both the academic and social challenges facing the students, and that his program was completely ill-equipped to help them in an efficient fashion. However, Jones learned from his mistake, saying that it later helped him start one of the most successful charter schools in New York.